this is the video for problems 3-5 and 3-6. These two actually go together, which is why we're doing one video. So basically we're given 5 transactions. We need to put them in the correct locations and then foot and balance the accounts as needed. So the first thing we need to do is we need to label our asset accounts. So we're going to have cash. We are going to have George Atlas Capital. Then we have revenues, expenses, drawing. And then we have down here, we will have equipment. This is all based on the transactions given us. And then for liabilities, we have accounts payable. So let's start with transaction A. We invested cash in the business of $7,000. So we need to increase our cash account. Again, that's done by a debit since it's an asset. And we also need to increase our capital account by the same amount because the owner invested the money. So the next transaction is we purchased equipment on account. So we purchased equipment for cash. So we need to decrease our cash by the amount we purchased and then increase our asset. So if you notice, we have a debit and a credit. So every transaction will have a debit and a credit of some sort. If we go back to look at the first transaction where we invested money, we have a debit in cash and a credit in capital. So that's one way to check yourself. Next, we purchased equipment on account. So since it says on account, we know it's going to be accounts payable. And accounts payable is an asset, so it is increased with a credit. Equipment, to show that we increased the amount of equipment we have, is going to be a debit. And so again, debit, credit. The next one is we paid cash on account for equipment purchased in transaction C of $800. So we're going to decrease our cash for $800, and then we're going to decrease the amount in accounts payable. So we're taking down the amount that we owe since we paid $800 on it. Again, debit, credit. The last transaction is that we withdrew cash for $1,100. So we're going to decrease it from cash and we're going to increase our drawing account. And so that's all that we would do for number 5. For number 6, we're going to total and foot the accounts that need it. So in this account, we're going to add our cash amounts together. So we have 900 plus 800 plus 1,100 gives us 2,800. Since there is only one transaction in cash, we do not need to do anything else with that, except we will put our balance on the debit side since cash is an asset and has a normal balance of a debit. So we have 7,000 minus 2,800 gives us 4,200. And then the last thing we have to do is we have to total up our equipment. So we have 900 plus 1,500. So our balance is $2,400. And that is all that we would need to do for, missed accounts payable. So accounts payable is a liability and has a normal balance of a credit. So that is where we're going to put our balance. We're going to have 1,500 minus 800, which is 700. And there you go. So there's all you would need to do for these two problems. So if you have any questions, let me know.